Lucy. Hey, oh, how about this, please? Give me a minute. I've got somebody after something. All right, real quick. Uh-huh. Hey, oh, no, yeah. Okay, sorry. Just trying to answer questions as they come through. That's a losing prospect. Pull this back. Okay, cool. Yeah, so I think the recordings are up and running. Right, let me just take my roll. So I see in Aliana inside, and it says here, I just right? Jaden is here, right? Jordan, I think Jordan's in school. Cassie is here. I'm seeing Kelsey. Liam online with us. I'm seeing Logan on my lead. Right. Marcus is here. I'm seeing Matthias. Noah is here. Right. Nyla came. Paige is here. Sequoia moved on earlier. Shimon knows. Celia is here. Teresa no. Valentino did. Come back. Oh, you went through. To get the food. All right. Well, he has had too much on his mind. Oh. I was not seeing. Well, I would love to go and get my haircut too. So I might have mid-month though. Right. Okay, folks. Yeah, kind of ready for your list. Sorry about that. All right, ladies and gents. Let me just kind of regroup and put this up here. Put this up here. Right. So we have some some more questions to do in the after lunch period here. Let me just check something real quick on the opposite side here. That's the ones we do now, right? So we do have to revisit those because we have to do the correction of net profit. Not moving on there. Right, and we have 2021, 2022, 22 from 2023, 2024, and 2025 Jan. All right, so this is the 2024 Jan Eastern Lyle, 2023, 2022, 2021. Okay, all right, cool, no problems. All right, so let's jump into it, but I would definitely like to check out the error correction, the net profit corrections. Right? Okay, make sure I have my PDFs open. Right, so I have my PDF there. I have my Excel spread here. Okay, cool. Oh, here's Logan. Hey, good afternoon, Logan. How you doing? Good to have you on. All right, just about to start there. Just gonna open a quick item here. When I was doing accruals, I kind of gone already. What is the percentage for the SBA and paper one? SBA is 20%, paper one is 30%. Yeah, all right, cool. So we're on the inside. Right, so we need to start because unfortunately, unlike the 10 to 12 session, I can't go past 3 o'clock. I actually wanted to finish like 2:55 because I have to go for my son and daycare and come back before the 4 o'clock class, which is my Form 6s. I have them for a double session this evening, right? Okay, folks, we have something else to wrap up here before we move on to the more recent questions from this decade, right? And that has to do with this, the statement of revised net profit, right? So let me actually go back to the start of this particular paper, right? So again, we kind of give up on the printing. So sorry about that, but that's just the luck right now. But they did call me when I was eating lunch just now and said they got the ink, but I had no card to go for the ink, and then I might have to take more than an hour. All right, so I'll get the ink tomorrow morning. So hopefully we'll have the ink here for tomorrow's session, which is budgets. Right, again, the budgets just coming straight from the past papers. I'm not going to be printing out the handouts because the handouts I made are like 20 sheets each. So yeah, we are going to do that. All right, we'll just go straight from the past papers. We might do that plus the absorption costing questions. All right, cash projections as well. Call that George. Okay, so what I want to do, the last question we worked was Beck Hammond, which is the one currently on the screen, right? So Beck Hammond here, right, had some errors, right? So we had this purchases for furniture that was put in the purchases account. We had a payment to somebody who we didn't, the debit and credit weren't equal. We shortchanged the discount allowed. We sent something to the wrong person's account, and we credited somebody who was supposed to debit, right? Now, out of all these things here, there are a couple of items that would actually affect profit. What's the very basic calculation for profit? Selling price minus cost price, and when you scale it up, you have what? R is revenue earned, and E is expenses incurred. So any item that affects either revenues or expenses will affect net profit. Now, you do have a couple other things that you have to watch out for. One of them is your stock levels. Opening and closing stocks do affect your profit because they affect the cost of goods sold, which then affects gross profit, which then affects net profit. So that kind of ping pong kind of thing. But I'll give you a relatively easy way to think about how to treat those things. But once we understand how errors in either revenues or expenses affect profit, we can also understand how the correction of those errors also will be catered for, or understand how to make the calculation so we correct net profit. So I'm going to start with this one, all right? So this is the 2010, which is Beck Hammond, right? Okay, cool. So Beck Hammond, right? So we have a statement of corrected net profit. Let me actually pull this down so it's a little more even in the split, right? A little easier to see. And let me actually zoom in here. Okay, I thought that zooms to that particular spot. All right. So we didn't. Right. So we need 250 is fine, right? 250 is fine. So, right. Okay. So if they ask you to do that, and which they did here, it says draw up a statement of revised net profit, right? So at the top here now, so okay, let me take off the item in the yellow, and I'm gonna re-highlight the 15,750, right? Hey, behave yourself. So the 15,750 is the incorrect net profit, right? Now, let's take a look at the items as we go along and see which of these might have affected net profit, right? So first of all, we have net profit or net income before corrections. Now, there's no one right format for this. There are multiple layouts you could use. I like simple and straightforward ones, right? Okay, so the figure you have here is 15,750. So that's what it said. It said that M. Hammond draws up his income statement, which shows a net profit of 15,750.
he later discovers the following errors. Right. A purchase of furniture, 1,500 cash, had been debited to the purchaser's account. Okay, so we had a debit to purchases. Should it have gone there? No. So right now, if you put money inside of purchases, that shouldn't be there. Is it too high or too low? Too high. If you put a figure inside an account where it shouldn't be, and you said you debited it, right? So purchases is an expense. Expenses increase with debits. So we've debited purchases when we should not have. So we have an extra debit, which would cause the value in purchases to be overstated or overcast, which means what? Too high or too low? Too high. So your expense, remember, purchases is an expense. What is purchases? When we buy stock to resell. That is an expense. So right now your expense is too high. So if you have too much expenses, what happens to profit? Is profit correct or incorrect? Incorrect. If you have too many expenses, will your profit be too high or too low? It'll be too low. All right. What? Okay, cool. Right. So if your expenses are too high, your profit is going to be too low. So when we correct the expense and bring it down, what do you think is going to happen to profit? Anything or nothing? Profit is going to go up, right? So if you have an expense that is too high, profit is going to be too low. When you bring back down your expense and you correct the error, profit is going to go up. All right. So for this one here, you're simply going to put add correction of overcast purchases. Or you can just add, so you can just put add correction for purchases, right? How much was it? It was 1,500, right? So we're going to add it on to the current profit, right? Now, this one, a payment to Ronaldinho was entered wrong in the bank account. Is bank an expense or an asset? Asset. Do assets go in the income statement or the balance sheet? Balance sheet. So this item wouldn't affect the income statement and by extension wouldn't affect profit. So item 2 is irrelevant to what we are currently trying to do. 3, a discount allowed of 256 was debited to discount allowed as 236. So here's my question. Did we use the correct figure? No. What was the correct figure? 256. What figure did we use? 236. Is that too high or too low? Too low. By how much? $20. So what we're saying is that discount allowed is an expense. The expense we put in was too low. If your expense is too low, it means you're not subtracting enough. And if you don't subtract enough, your profit is going to go too high or be overstated. So again, if your expenses are too low, profit is going to be too high. So when you fix the problem now, when you fix the problem and you increase the expense, what's going to happen to profit? It's going to come down. Sorry, what? Huh? Yeah. Correct. So we're going to less correction of undercast discount allowed. That's how much? $20? Okay, cool. The 4th item, goods with a value of 37 had been entered in Dwight's account instead of Russell. Right. So whenever it's personal accounts, like people's accounts, those don't affect the income statement. All right. A check drawn on behalf of Terry had been credited. Right. So again, we put something on the wrong side of a person's account, and personal accounts don't affect the income statement. So there were only 2 errors to correct for. Hold on. I don't know what's going on with these things now. I feel like I should have done a restart during lunch. Anyhow. Right. So there were only 2 errors for which we had to correct. Right. We had to correct for the overcast purchases. Right. So if purchase is an expense, if it's too high, profit is going to be too low. So when you fix it, expenses are going to come down and profit is going to come up. Always remember, expenses and profit move in opposite directions. If expenses rise, profit falls. If expenses fall, profit rises. Right. If it was revenues, it would be the opposite. Right. Sorry, one second. What's the question? For the discount allowed, when you said that it was 27. No. Discount allowed. Let me see. 256, 236. I get 20. Yeah. Check it again now. Maybe you put in a wrong figure somewhere. Right. Okay, cool. Yeah, so when we correct an overcast expense, it's going to bring down the expense and profit is going to go up. So that's why we add. If we correct for an undercast expense, which was too low, it means you're going to bring it up. And when you bring expenses up, profit going to go down. Okay, so I was glad we started with this one because it's just two errors, and both of them were expenses in opposite directions. So you saw what happened when you corrected an overcast expense, and you saw what happened when you corrected an undercast expense, right? Overcast, undercast, yeah. For it to affect profit, the figure has to be wrong. So one kind of exception is that it could be omitted. But if it's omitted, technically it's undercast. It's zero when it should be other than zero, right? So yeah, so either the figure is too high or too low. That's basically it. But what the figure is, if it's revenue or expense, that's where you have to understand the distinctions. All right. In the general journal, it was 27. For this one, let's see. Nope. In 20 here. Any suspense account, let's see. Suspense account, let's see in 20 again. Yeah, I don't know why this thing doing that to me. It's yeah, I'm not seeing 27 here. Was it in a different question? You saw 27 for discount allowed? Nothing there. Nothing there. Maybe this one. I don't know. 27. That was a totally different question. Yeah, that was the 2012 question. We were doing the 2010 question. Sorry about that. All right, maybe hopefully that clears it up. All right, Emily one. Yeah. All right. Okay. So here's my question. Are you all okay with the example of how to correct net profit? Now it can get more complicated, yes. So I'm not trying to throw you in the deep water. Dave boy. Oh, Devin, that's you? Right, let's see in Dave. DEV. I'm assuming it's Dave and not Dev. Dev? Okay, cool. All right, nice. Okay, I'm gonna just mark your present and we continue. So, Devin, what we doing? We're doing some correction of net profit, statements of correction of net profit. All right. Hey, sorry, I'm glad to hear that. All right, lovely. All right, so we just did Jan 2012 as the example. So I'm gonna pull up the next one now. Oh yeah, sorry. Go ahead. No problem. All right. Okay. And those on Google Meet. So I know. Devin just jumping, but Aliana, Ayaz, Jaden, Liam, and Logan. If you guys are good with what I just did, just please give me a Genie chat. If you're good with that, give me a Genie chat. If you need me to re-explain, give me an R. If you have any questions at all, please feel free to ask. Right? We know it's just today. Well, for errors, and we have tomorrow is budgets and hopefully absorption costs, and just the stuff straight from the past papers. I'm not going to teach it from scratch. I don't believe it should be on the syllabus, but that's a whole different discussion. Saturday is stock valuation. Sunday is payroll. Right. I had to confirm. I mean, I have 2 sessions planned for Sunday. I have to see if I could do both. Right. But worst case scenario, if we had to miss one, we will miss one. But I'll talk to my wife. Right. And then Monday, once again, we have our last double session. But anybody, of course, who doesn't do Spanish, who wants to come from one or whatever the case is, let me know. I will be here. Most likely. Okay, thanks for the feedback, everybody. 1, 2, 3, 4. Okay. Cool. All right. Oh, it's look up here now? Okay, no problems. Oh, yes, I. All right, YouTube people, how we doing? Finish? All right, cool. Anybody else look up here now? Good? Okay, all right. Let's take a look at the Western Lee one, right? So Western Lee was the 2004 question. Yeah, which we did. Sorry, one sec. Yeah, so my God. Right, so Cheeseman didn't have a net profit to correct. Mr. Best, I thought I made up one. Just now. All right, yeah, okay. So we just did Beck Hammond. So not 09, we will do 04, right? So 04 is the one we will do. What about 06? Now 06 is a little sketchy. Cool. All right. So we're looking at the 04 question, which is Western Lee, right? Hey Rebecca, how you doing? Let's have you on. Right. So Western Lee found the following errors in his books on Jan 20th. So purchases overcast. So purchase is an expense, right? So that's going to affect net profit. Sales was undercast. This is a revenue. So that's going to affect net profit. Actually, everything here will, because rent, electricity, telephone, and purchases are all expenses. Sales is the only revenue, but still, whether it's a revenue or an expense, if it's incorrect, it will result in an incorrect net profit. Now, it says, using the above information, prepare a statement for the correction of the net profit figure, which currently stands at 12,005. Right. So what I want you to head up is Western Lee statement of corrected net profit for January 2022, whatever the case is. Right. You don't have to put a date. Right. And then you're going to start with the net profit before correction is 12,005. And then go through here and see what you're going to. So I'll give you guys a minute or two to get a little head start and try it on your own, because you have to try it on your own. All right. Good. Okay. Oh, okay. So those. Okay. All right. I want to starting here. If you're still working, that's not a problem. Just let me know. All right. So Western Lee statement of corrected net profit. So the net profit So you can put before correction or before adjustment. Either one is fine. 12,500. All right, cool. So let's take it. So the first one was purchases was overcast. So hold on. So purchases, is it a revenue or an expense? Money you're spending, you're buying stuff, right? So that's an expense. Okay. All right. Is it too high or too low? Is it overcast or undercast? Overcast. So if your expense is too high, profit is going to be too low. So when you fix the expense and bring it down, profit is going to go up. So you're going to put add correction of overcast purchases. All right, so that's 6,000. Next, second item. Sales was undercast by 14,000. Okay, is sales a revenue or an expense? Money you're earning, so that's revenue. Okay. Is it too high or too low? Undercast or overcast? It says undercast. So revenue is money coming in. If your revenue is too low, your profit is also going to be too low. So when you fix it and you increase your revenue, profit going to go up as well. So you're going to add this one. So add correction of undercast sales. All right. So I know it's just two, but I'm asking now. Are we okay with the first two things so far? Any questions? Anybody at all? Anything? If you need to re-explain, now is a good time. Google Meet. Let me check you. All right. So Ayaz, Jaden, Devin, Aliana, Liam, and Logan. If you guys are good with that, kind of give me a quick G. Ryan, I have the solutions. I recorded all of my videos. I just have no time to edit them. They recorded since February. It's Carnival Friday. If it's an overcast expense, when you fix it, you will add it. Yes. But sales is a revenue. So the opposite applies. What paper is this? This is 2004 January. Let's double check my people on this side here. NDG is going 1, 2, 3, 4, 5. So I'm missing one person. All right. Okay, yeah. So like let me zoom in a little bit more, right? Go here. Right. So like I was saying, purchases is an expense. If it's overcast, that means it's too high. If it's too high, it means you would have subtracted too much in the calculation of profit, and your profit would be too low. So when you fix your error now, right? So your purchases was too high, profit too low. When you fix the error and you bring down the purchases, the knock-on effect is that your profit going to rise. So that's why I'm adding the correction of the overcast purchases. Sales being undercast. So first of all, sales is a revenue, right? Revenues cause profits to increase when they increase, right? But if revenue is undercast, that means it's too low. It also is going to result in a profit that is too low as well. So when you fix the undercast revenue and increase it, your profit is also going to increase. And that's what we add. Right? So CSI, how to pronounce the name, but let me know. Right. Next. So the next three items are all expenses, rent being overcast, and telephone. Right. So just like the purchases, when you have rent or telephone, which are both expenses being overcast, that means they are too what? They are too high. If the expense is too high, your profit is going to be too low. So what we're trying to figure out is when we fix the expenses being too high, they're going to come down. And when expenses come down, profit goes up. Right? So we're going to add correct coin, yeah, of overcast rent. That's 2,000. And add correction of overcast. Okay, so the only item here that had to be subtracted was this one. What account is this? Is just a correction of net income. It's not an account per se. Expense account, no, suspense account was building the question, right? So electricity was undercast. So electricity, is it an expense or a revenue? It's an expense, right? What does undercast mean? It means it was too low. So if your expense is too low, it means it didn't subtract enough in the calculation of profit, and therefore your profit will be too high. So when you fix your expense from being too low and you increase it, your profit is going to come down. So you're going to put less Hey, not you. Right. Less correction of undercast electricity. Right, and that what you see in here would be the correction of net income. Right. Okay. Right. So anytime you have overcast expenses, that means they're too high. If they were too high, it means you subtracted too much in the calculation of profit, which is going to result in a profit that's too small. So when you fix the problem, if the expense is too high and you fix them, they're going to come down. And when expenses come down, profit goes up. Right. Now the reverse holds true. In the case of the electricity, if it's undercast, that means it's too low. If the expenses are too low, it means it didn't subtract enough in the calculation of profit from revenue. So if you didn't subtract enough, your profit is going to be overinflated or too high. So now when you fix your understated expense and bring it up to the correct value, profit is going to go down. Right? So that's why we less this item here. Right? And for the revenue, well, it's the opposite. If revenue is too high, profit going to be too high. If revenue is too low, profit is going to be too low. So when you fix that, if profit too low and you fix it, it's going to go up. And if it goes up, profit is also going to go up as well. All right. In class, people, are we okay with the correction of net income as shown on the screen there? Any questions, anybody, anything? Okay, all right. Google Meet, if you guys are good with that, it's kind of giving me a G in the chat. If you need me to re-explain anything, R help me to help you, but let me know specifically what you'd like me to re-explain. Yeah, the labels are, there's no one right thing to put. You could, oops, sorry. Yeah, you could just put, well, you see, if you put add overcast purchases, that is technically not what we do. We add in when we fix it. Oh, okay. All right, yeah. I could roll with that. Yeah. All right, cool. And Baby and Kiara, you might have to go and watch my tutorial on this, right, on my channel, right? Because right now we kind of, what are the most frequent topics, Emily? Emily added to their partnerships, but even that changed. So I have a file I could show you with all the topics on every exam that's come from 2025 Jan, go back to about 2002. Prior to 2019, I tell you, yeah, partnerships and yeah, some stuff is to kind of cycle through, but now it's anybody's guess. I even asked ChatGPT to give me some predictions. I have it on my phone. I'll have to check, but yeah, no. Right now, it have no most frequent topics. Sorry. Right now, it's helter skelter. I have too much crap in the syllabus that I need to take out. They're not doing that. Okay, so that was 2004. Hold on, let me just check my pages again. 140. All right. Okay. So what I want to do is we're going to try the May 09 question, which is Stephen Peterson, right? Now for Stephen Peterson, we are going to have to do, one second, eh? Yeah, the journal entry and the correction of net profit. Let me just check. I gotta wait. This one? All right, cool. Good to go? All right. Right, okay. Okay, guys, so let's take a look at the screen, right? So we have Stephen Peterson, an accounting student, prepared his father's final accounts. The following errors were discovered by the accounting technician who examined the accounts. So we have 6 errors, all right? The sale of goods, 2,500 on credit, had been entered in Martin's account as opposed to Martin. The purchase of goods was completely omitted from the books. The purchase of a motor car had been entered in motor expenses account. Discounts allowed had been entered on the debit side of discounts received. Wages have been undercast. And then we have a receipt from J. Slows had been credited to the cash book and debited to Slows. Right. Now we have to do the journal entries to record the correction errors and then do the correction of net income. So I'll give you a couple of minutes, then we'll talk through a couple of things here. But I want you all to try, right? Read through. Now, there's no obligation to answer the questions. To correct the errors in the order of appearance. I would always say yes. Please show their correction in order of appearance to avoid confusion, right? But what I would also say is do what you can do first, right? So I'll give you a few minutes, see what you come up with, and then we'll go from there. This is May 2009. Okay. Let's do a couple of them to start off, right? Just in case anybody get in some trouble. All right, let's talk about it. Let's talk about the first one. The sale of goods, 2,500 on credit to K. Martin, had been entered in Martin's account. All right. Okay, so tell me something. If you make a credit sale to somebody, what account do you debit? What account do you credit? The credit sales, that's where the value is coming from, and you debit the debtor, the person who the goods went to, right? So again, you could follow your double entry hack. Credit where the money, credit where the value coming from, and debit where it's going. So the value is coming from sales, we're selling goods, and it's going to the debtor. Okay. So we were supposed to debit who? To whom did we sell? Martin or Martin? We sold to Martin, but we entered it in Martin's account as a debit, right? So should we have debited Martin? No. Who should have gotten the debit? Martin. Did we debit Martin? No. So to fix that, if we were supposed to debit Martin and we didn't, how do we fix that? Debit Martin. Right? So we're going to debit K, Martin. For how much? 2,500. Right. Now there's a debit in Martin's account that shouldn't be there. How do we undo or remove a debit that shouldn't be there? We credit the account. We're going to credit K, Martin. right? Now this, where you put in the wrong person's account, this is an error of principle. So it's the correct error of commission, sorry. The wrong thing, my bad. Okay, item 2, right? The purchase of goods 1575 was completely omitted from the books. What does omitted mean? It wasn't put in, good. So if we purchase goods for cash, follow the money. Where's the money coming from? Cash, and it's going to pay purchases. So you credit where it's coming from, and you debit where it's going. So you credit cash, and you debit purchases. Okay. Did we enter the transaction at all? No, it said it was omitted. So how do we fix that? By putting it in. So we're supposed to debit who? Debit purchases. How much? 1575. And credit cash. It's cash, right? Yeah. Right. Now, when you forget a transaction or you omit it, that's an error of omission. So we're going to correct error of omission. Right. So that's the first two. So, ladies and gents in class, how are we feeling with the first two? Any questions? Anybody? Anything? Good with that one? First two? All right. Google Meet. All right. So Aliana, Ayaz, Devin, Jaden, Liam, and Logan. If you're good with that, just please give me a Genie chat. If you need me to re-explain, it's not a problem. Give me an R. Or you could unmute and ask a question. Either one is fine. Yeah, Kiana, you might have to go and check my errors guide, these tutorials on my YouTube channel. Check adaptation, error correction, check it out there. Right, we went into detail before with some T accounts and stuff, but normally you're not supposed to show the T accounts. But that might be helpful. Right, okay, that's the first two correct errors. Right, so I'll put in next two up, right? So I'll give you a few minutes again, and then we'll see what you came up with. While you're doing that, I'm gonna get some water. Okay, the thing with error correction is if you're having trouble with it, the T accounts, the track where the entries went, usually helps people see. If they don't have that, then it becomes a little tricky. Okay. Let's talk here. Let's talk to Vigo. All right. The purchase of a motor car had been entered in the motor expenses account. Okay, you purchase a motor car. What's it for cash? Right? What's the double entry? But we buy the motor vehicle, right? Okay, so money is coming from somewhere and paying for the motor vehicle. So what's the double entry have? Credit where it's coming from and debit where it's going, right? So if money is coming from cash, you credit cash and you'll debit motor car or motor vehicle account, right? Did we put it there? No. What does it say we put? Where does it say we put it? Motor expenses, right? So we debited motor expenses. How do we undo a debit to motor expenses? Right? Credit in, good. And where was the debit supposed to go? It was supposed to go to motor car, right? There, guys, I feel not sleepiness lashing my real hard, so I think I was supposed to go for water. I forgot. Right, so debit motor car, credit the expenses. Right. Sorry, guys. A real having a power cut here. All right. The fourth item: discounts allowed have been entered in error on the debit side of discount received. Okay, discounts allowed is an expense. When we allow discount, you're supposed to debit discount allowed. But instead of debiting discount allowed, we debited discount received. So we did debit an account, albeit we debited the wrong one. All right. So how do we fix that? Well, we have a debit missing from discount allowed that should be there, and a debit in discount received that shouldn't be there. So if we are missing a debit from an account, how do we correct that? We put it in. So we were supposed to debit. Hold on, just now my wife calling me. Hello? Okay, talk to me. Oh, okay. Before I do that, what happened? Right. Mm-hmm. Mm-hmm. Yeah. Mm-hmm. I don't have a car. They carried one to fix, they brought back one, and mom going the next one. Oh, okay. Well, when I come for Shiloh, I'll pick you up. Yeah. Mm-hmm. Oh, okay. Yeah. Might be. Never know. So it might be that, but you never know. It could be other things too. You could just be fed up with it. Yeah. Okay. Cool, bye. Okay. Fun times. All right, guys. Sorry. Yeah. Right. So, in item 3, we purchase a motor car. How do we classify motor car? Asset. If you buy an asset, is it increasing or decreasing? Increasing. How do we record an increase in an asset? With a debit. So we were supposed to debit motor car, but it said we entered it in the motor expenses account. Okay. Was it supposed to go there? No. It was supposed to go motor car. Did it go there? No. So we're missing a debit to motor car. How do we fix that? We debit motor car. We have a debit in motor expenses that shouldn't be there. How do we undo a debit? With a credit. All right. So I forgot to say that this type of error is called the error of principle. It's where the wrong class of account is used to record the transaction. So we were supposed to put it in an assets account. We instead put it in an expense account. So that's not where it's supposed to go, right? So that's an error of principle. You want to know if you're ready for accounts. I think you only know if you're ready when you see the exam. that's the asset test there. Speaking of asset test, that is on Monday. Right. Now, item 4, discounts allowed, 400 have been entered in error on the debit side of discount received. Okay. Discounts allowed is an expense. When you record the expense, you debit the expense account. So we were supposed to debit discount allowed. Somehow we mixed up and put the debit in discount received. Now, discount received itself is a revenue and it's supposed to credit revenues, but we debited it. So, long story short, we were supposed to debit discount allowed, but we debit discount received. So, a debit happened. Did it happen to the right account? No. What account was supposed to be debited? Discount allowed. Was it debited? No. How do we fix that? By debiting it. So we debit discount allowed. What account was actually debited? Discount received. Was it supposed to be debited? No. How do we undo a counterbalance of debit? By crediting the account. So that's this item. So this was also an error of principle because we were supposed to record an expense and we put it in a revenue account, albeit on the wrong side. Okay. All right. In class, people, are we okay with items 3 and 4? Any questions? Anybody? Anything? Okay, good. Google Meet. Liam, Jaden, Ayaz, Logan, Aliana, Devin, Jaden. If you guys good with that, give me a quick genie chat. If you need me to re-explain any of them, all of them, let me know. No problem. Do you think? Right, we have 2 more items here, so I'm gonna put them up. Like I said, I'm going for some water. Just taking my blood flowing too because I'm feeling a little sleepy there. I wasn't supposed to eat the whole lunch, but it was tasting too good, boy. Oops, sorry. That's me. Oh, right there. Yeah, that's my usual cup. I had an infinity walk up with drink from it. Lost in the clutter. Okay. Readers account undercast by 430. So this one just seems to be a single account that has an error. So here's my question. Readers, if it's undercast, does that mean too high or too low? Too low. How do we fix that? Increase or decrease? Increase. Okay, wages is an expense. How do we increase an expense? Debit or credit? Debit. Right? Now, of course, because it's a one-sided error, what account do we then use to facilitate the double entry? Very good. Correct. Undercast. Wages expense. Right. Now this one, a receipt of cash from slows had been entered on the credit side of the cash book and debit side of slows. Now, if we receive cash, so if you follow the double entry hack, credit where it's coming from, debit where it's going. Cash came from slows. So that's where it's coming from. So you were supposed to credit slows and it's going to cash, debit cash. But we reversed the double entry. So this is a complete reversal of entry. So what do? Okay. So we were supposed to debit cash and credit J slows. What we do is we debit cash and credit slows for double the amount. Why double the amount? Once to undo the error, and the second time to enter the transaction as it should have been entered. To correct complete reversal of entries. What is the F3 file? It's there. It's gonna come and go. You gotta be ready. Best you can. Okay, so let me maximize here. So these are the general journal, the correcting entries, right? So I already asked everybody about 1 to 4, right? So specifically for 5 to 6, right? In class, people, are we okay with items 5 and 6? If you all have any questions, now is a good time to ask, eh? Google Meet, in the drill. If you guys are good with that, just kind of give me a quick G. If you need me to re-explain, give me an R, please and thanks. All right, cool. So now we have one more piece to do for this question, and then we're going to shift to tackle some of the questions in the last 5 years, most recent questions. All right, so now we have, sorry, one sec. All right. So it says here, the income statement prepared by Stephen Peterson showed a net income of, hey, give yourself. Okay. Yeah, 24,521. Prepare a statement showing the corrected net income. In other words, they wanted to start with 24,521 and make the corrections based on the errors you have here. Okay, let's go through these items one by one and see which one of them would require adjusting the net profit, right? So again, Shana, do some deep breathing, Shana, make a list and get down to it. Right. What's the first question we have to ask when assessing whether an error would affect net profit? Is the item a revenue or an expense? Are you all right? For sure. Okay. Eric, bombo class. Yeah, you could ask that too, but I'm not sure I might get the right answer. Yeah. So the first question we have to ask is the item a revenue or an expense? That's me? Oh, okay, cool. Right. So the first one, sale of goods. So you might see sale and say, hey, well, sales is a revenue. So this one. But look at where the error was. The error was that it was put in the wrong person's account. Do people's account end up in the income statement? No. So therefore, that first one is irrelevant. Next one, the purchase of goods was completely omitted. Right. So purchases is an expense. It's money you're spending to buy goods. Cool. If it was omitted, that means you didn't put it in, which means the total expense figure would be too low. So profit would be too high. So when you fix it and you increase the expense, profit going to go down. So we're going to adjust for the second item. Next, a motor car. The motor car have been entered in motor expenses account. Okay. So motor car is an asset. Assets don't go in the income statement. Oh yeah, that's an interesting comment. All right. But expenses do. It says motor expense. So basically we put a figure, $5,000 in motor expenses that should not have been there. So if we put it in and it shouldn't have been there, motor expense is going to be too what? High. And if the expense is too high, profit is too low. So when you fix it and you bring the motor expenses down, profit going to go up. So we have to adjust for that one too. All right. Now, number 4 is a tricky one because what happened is discounts allowed was put in discounts received, but on the debit side. If we had put it in the discounts allowed, it would have gone on the debit side anyway. So this one, item 4, requires no adjustment because what would happen basically, the effect on net profit was cancelled. Because what happened here was you understated an expense and you understated a revenue. Sorry. I came home and I pushed the gate open and it's stuck on the track. When I looked at a snake on the track, I was running over it. So I chose to let it go. I pulled the gate back and the snake slithered away. Right. Anyhow, yes, Timmy, looking good there. Right. So long story short, we undercast an expense and a revenue. So what happened is if both of them went down, they'd cancel off. So really and truly, you could show the adjustment for both of them, but to be honest, it is not required. I wouldn't do it. It was a waste of time. Actually, I lie. I would probably do it just to be detailed. All right. We'll come back to number 4. Number 5. The wages account was undercast by 430. Wages is an expense. Right. What year is this? This is 2009 May. Eric. Right. Wages is an expense. If the expense is undercast, what does that mean? It's too low, which means profit is too high. So when you fix the expenses that are too low by increasing it, profit is going to go down. Right? So that's 2, 3, and 5. And then this one, the receipt of cash from J Slows, that affects J Slows and cash. Neither of those items go in the income statement, right? Okay, so to keep it simple, and don't forget you have your net income down here, right? Right, so you have a net income of $24,500. So here's what I want to do. So head up Stephen Peterson, statement of corrected net income. They don't give us a date, so we don't have to worry about a date. It's not a big deal. All right, and what I want you to do, therefore, is I want you to adjust for these 3 items. Right, see where you get. Yeah, 2009. Yeah, Kalani, thank you very much. Right. The kids who come for Mishka's 4 to 6. Not today. All right. Okay. Let's push this up. Put this here. All right. So we're going to start with the net income of 24,521. All right. So let's go there. That's a little too big. We don't need 300%.
Huh? All right. So 17. So Stevie. 116.
All right. Let me take a look now. All right. Cool. So we're going to start with the net income before adjustment. Uh, 24,521, right? Okay, cool. All right, so we have a few items. Right, so the purchase of goods was completely omitted, right? So we're going to minus the omitted purchases. I think this is something that Jaden was asking. If you could just put that, I think I said yes. Right. Motor van have been entered in motor expenses, right? So motor expenses is going to come down when we fix the error, and if expenses come down, profit goes up. So add overstated motor expenses, right? 5,000. And the last one is wages was undercast, right? So we're going to minus the undercast wages. Well, technically is the correction of that, eh?
Right, so 27.
Eric, you're off by about 10,000, boy. Maybe you typed the wrong figure. Me is off by, what's that, about 400? That 400. Yeah, something so. Right. Right. Okay. Now, the only other thing that could have gone inside of here would be item 4, right? Now, for item 4, what you could have done was, again, so discounts allowed was undercast because we didn't put the item in discounts allowed, which is an expense. So when you put it in, you have to subtract. So less omitted discount allowed, right, which was 400. But the discount received was also undercast. So when you fix that, it's going to go up. And discount received is a revenue, right? Undercast discount received, right? You could also put undercast discount allowed, but omitted was probably better as you actually didn't put any figure at all, which would result in it being undercast. Okay, so I would say no, it would actually not have an effect on the calculation overall. Watching the marks, so now it's 7 marks. So because it's 7 marks, I would say yes, because you might get a mark or a half mark. So if you do 1, 2, sorry, no, right. So 1, 2, 3, 4, 5 items, and then I guess a mark for the calculations and a mark for that. So yeah, sorry. You should probably put those in because yeah, they needed to be adjusted. I mean, the net effect was that they would cancel off each other. Yeah, so if it's 7 marks, yeah, you might really have to put that, to be honest. Let's tell the crash course people that way. All right, okay. Google Meet, if you guys are good with the item on the screen, let's come out quick Genie chat, please, and thanks. Okay, in class, people, are we okay with that? Any questions, anybody, anything? Good, okay. No problems. Yeah, no problems. Take your time. Right. How you doing? Hey, Shane. All right. So since you have to go in 10 minutes, let's see if you get one more done, and then after you go, right? But I go over the last part. Tamia, I'm not gonna switch questions. I'm really sorry. I had a press on. This is the 09 question though, right? So you can actually find this entire question on my YouTube channel, explained from scratch. All right. So, yeah, sorry, I had to kind of press ahead. I do like fake nails and press on. Catch that joke, I have more for you. Okay. All right. Ladies and gentlemen, close that off. 2020 is now open. Right. This one and that one. I'll give you the question. Just give me 1 sec. I'll check that message just now because it's not too hard time for that. Sorry? All right, 1 sec. Yo! Oh, all right. All right. If you gotta go, you gotta go. I don't see it. All right. So give me 1 sec. Let me just pull up the questions. Right. So, and come back. All right. So we have just about half an hour because I had a cut just slightly before 2 o'clock. Hopefully we won't back in time because I don't really want to run it. Anyhow, let these guilds out here. What are we doing? Okay, this is the 2021 Jan. Yeah, 2022 Jan. Where 2021 then? And you know what? That's what I have. That hold on. 12. This one here. Okay, well there we go. Right. Okay, so for each scenario, identify the following errors which were later discovered. Okay, so these are the types of errors. So that's the one, right? Now, the errors are errors of omission, right? Omission comes from the word omit. What does the omit mean? To leave out. So we saw that in the previous question. So if you leave out an entire transaction wholesale, that's an error of omission, right? An error of commission is if you put in the wrong person's account. All right. Principal is the wrong class. So like in the example we had, so for the commission, remember we had it was K Martin and K Martin, right? That kind of thing. And the other one was Dwight Smith and Russell Smith, right? So yeah, so the wrong person. Principal is like when you buy a motor vehicle, but you debit motor expenses, or vice versa. Original entry is where you use the wrong figure. So let me say the figure was supposed to be 800 and you type in 900. That's original entry. Transposition, we've seen that. That was the first error from today, actually. It was 303, but they put in 330. All right. Compensating errors, that's where two errors occur that balance off each other. So the previous one is somebody discount allowed and discount received. So discount allowed was undercast and discount received was also undercast. And because they are one as a revenue, one as an expense, they'll cancel it out. And well, we saw complete reversal once or twice already. So here, a sale of goods on account to Mullins had been posted to the account of Miller. So this is where the wrong person account is used. So that is the error of commission. Next, office equipment sold for 2,000 have been posted to the sales account. Okay, if you sell office equipment, it's supposed to use the office equipment account. Sales is only for what asset? Sales is only for inventory or stock. Office equipment is not that. So this is an error of principle. So the wrong class of account was used. Right? So instead of an asset account, you use a revenue account. Right? Wrong class of account. Wages 4,500 for office workers have been debited to bank and credited to wages. Right. If you pay in wages, you're going to debit the wages and credit bank. So this is a reversal. So complete the reversal of entries. Right. Cool. So that's the types of errors. Now it says prepare the journal entries to correct the errors identified on page 24. Okay, cool. So I'll put those two up. Oh, you want the this one here? No problems. All right, cool. All right. So I'll maximize here so you can see all three errors. So I'll give you a few minutes. See if you can come up with the debits and credit to correct those errors for me, please. Or this batch went there? Went or didn't go? Huh? If you're ready for all right, small thing. Let me see. Okay. So the first one says a sale of goods for 1,800 to Mullins have been posted to Miller's account. Right. So let me pull this up so we could actually zoom in on this side. So it's not as small, right? Ooh, that a little too big. 343% is a little too much. Anyhow, let me go here. We'll do this. We'll go down. All right. Right. So the first one. Okay. If we sell goods on credit to anybody, we will debit them and credit sales. Is it suspense account? We did that earlier. It might reappear, but this may not necessarily be suspense. Right. So we debited Miller, but we did not debit Mullins. So if we didn't debit Mullins, how do we fix that? By debiting Mullins. So if we didn't do something, then just do it. How much? 1,800. Now we did debit Miller. Were we supposed to? No. How therefore do we undo a debit or counterbalance it? By crediting the account. Once I seen a long comment here. When payment we should have been debited, right? Good. Yes, that's correct. Oh, thank you, Nala. That was a good thing. There you go. Lovely. Good job, guys. All right. Right. Item B now, or item 2. Right. Office equipment sold for 2,000 have been posted to sales. So when you sell an asset, for example, office equipment, after you sell it, do you now have more or less office equipment than before? Less. So the amount of the asset decreased. Agreed? Right. To record a decrease in an asset, you have to credit. So we were supposed to credit office equipment because we sold office equipment. But it said it was posted to sales, which implies we credited sales. So we have a credit missing from office equipment. To fix that, you simply have to credit office equipment. Sorry? The line? Oh, no. This is the next piece. Down here. The actual journal. See? They gave you the journal down here. Right? Right. So that was how much? 2,000. So we were supposed to credit office equipment. But we did credit sales for 2,000. Were we supposed to? No. How do we therefore undo a credit? By debiting the account. Right. The third one, wages of 4,500 for the office workers had been debited to the bank and credited to the... Okay, right. So this one is a complete reversal. So what we have to do is put in the correct debit and credit, but for double the amount. Why double? One to cancel the incorrect debit and credit, and one to enter the correct debit and credit. So if you pay wages of office workers, so that's wages, office wages, whatever, right? With a check, you're supposed to debit wages expense and credit bank, right? The amount was how much? 4,500. So what we're going to do is we are going to double that. Again, once to cancel the incorrect amount and the other time to enter the correct amount. Right. So this here is the general journal for this item. Okay. How are we feeling with that one? Any questions? Anybody? Anything? We okay? Google Meet, if you guys good with that, give me a quick G in the chat, please and thanks. If you need me to re-explain, let me know. You okay? All right, cool. Ow. Right, so that's the 2021. So 1, 2, 3, 4, 5 out of 6. So let me know what's going on. All right, okay, so oops, my bad. Nope, we're there, right? Right, so let's go back up to 2022 then. Right, so 2022, right? The following errors were discovered after the preparation of a draft income statement on 31st December 2021 in the books of Jardy Parks. So we have a credit purchase of goods from 670 have been recorded as 607. So there's an error of transposition. The digits were mixed up, right? Purchase of furniture, 5,600 for use in the business had been debited to the purchases account. If you buy furniture, that's not supposed to go in purchases. That's in furniture account, right? But they put it in purchases. Right. Sorry, one sec. Yeah, and then the last one, closing inventory have been undervalued. So undervalued is undercast or understated, which means what? Too high or too low? Too low. So by 500, right? So inventory, how do we classify inventory? Asset. So if something is too low, how do we fix that? Increase or decrease? Increase. So you want to increase the value of the asset. And what do we do to make assets increase? We debit, right? So you're going to debit inventory. And because it was just a strict undercast of one account, we'll need another account to help. What account would that be? Suspense. All right, guys. So just 3 quick errors here. Organize that. Narratives are not required in bold. All right. This is 2022 January. That's correct. Yes. I'm gonna push this up real quick and push this down there. You can still see all. We only need to see one at a time anyway. You take it, right? So what I'm gonna do, I'm gonna pull this up a little bit more. Right. So we're good there. Is that clearly? Is that too small? That looks about right? Okay. Okay. So first one, a credit purchase of goods for 670 from A Turi had been recorded as 607 instead of 670. Okay. So quick question. What was the correct figure? 670 or 607? 670 was the correct figure, but 607 was the figure that was actually used. So is that figure too high or too low? Too low. By how much? $63, right? So the debit and credit for this transaction were both undercast or understated. So to fix that, we have to increase each of them. To increase a debit, you debit again. To increase a credit, you credit again. So if you want to increase the item, you do more of that. So if your debit is understated and you want to increase the debit, you debit. If your credit is understated and you want to increase the credit, you credit. So the debit and credit, if it was a credit purchase from A Turi, would be credit debit purchases and credit A Turi. So you can put credit to A Turi, you can put A Turi. Right. So the debit, the amount would be 63, right? Because again, it was the amount by which it was understated. So that's, if you want to show the working 670 minus 607. Right. Now they also said narrative is not required. So we're not going to worry to figure out a narrative. But long story short, that would have been an error of transposition. Okay, next. Purchase of furniture was put in the purchaser's account. So again, purchase of furniture is an asset, right? A non-current asset. It should go in that same account, as in furniture. If you buy furniture, you should put it in the furniture account, not in the purchaser's account. That is only for inventory or stock. So we would have debited this account instead of this account. So first things first, we were supposed to debit furniture and we didn't. So furniture is missing a debit. How do we fix that? By debiting furniture. I would suggest between separate transactions, skipping a line. Yeah. If you didn't do this, not a big deal, but just for the sake of visual, you know, the optics, right? Now, on top of that, we have a debit in purchases that shouldn't be there. So how do we cancel or undo a debit? By crediting it. Right. Right. So this, by the way, would have been an error of principle. Right, where the wrong class of account was used. Instead of using the asset account, we recorded the transaction in an expense account. Yeah, this is error correction. Right, closing inventory had been undervalued by 500. Okay, undervalued means too low. So to fix that, we have to increase the value. The item is an asset. To increase an asset, we have to debit the asset account. Inventory account, how much? 500. And because it was a one-sided error or an error in one and only one account, we have to use the suspense account to facilitate the double entry. Right. And that's it for that question. So in class, people, are you okay with that one? Do you have any questions? Issues, problems? No? All right, Google Meet, you know the drill. If you guys are good with that, give me a quick G in the chat. All right. Hey, Geneva, that's correct. You will debit inventory. Increase the value. Liana, Logan, Ayaz, and Reggie. What's your thoughts on the Student Hub 12-hour crash course, Israel? That works for some people. It doesn't work for everybody, but certainly neither does my format. My format, I do certainly like a 10 to 12 and a 1 to 3 for like 8 days. And that can work for some people, but it can't work for other people. So it's important to know your learning style and what you want out of it. So when is their own? I don't know. You gotta check. If you check the Instagram page, you'll see it. Yeah. But yeah, that's maths. Yeah. No, well, they have for different subjects, apparently all. Yeah. Bianca, can I do maths?
Nah, sorry, Bianca, maths and hiatus right now. We just crashing. We're not crashing. We're just jamming PoA until Monday. Monday's the last day. So Tuesday we resume maths. But if you check my YouTube channel, there's find plenty lives for the last like 4 or 5 months. Right. Geneva, this was the Jan 2022. All right, guys. So we still have some time because I can't leave until I have a car anyway. So, right. That was 2020. Okay, sorry. One sec. So Jan 20. Do I want? No. I don't want the Jan 23. I want this one either. Oh, that's a budgets. Budgets. The bud gets. All right. Let me see. May 23. So Jan 23. So the Jan 23 is a whole trial balance you had to do. Yeah. You had to do over the trial balance because they gave you the trial balance here, but there are clearly some errors. I would really suggest you guys go on my channel and check out this one here because it's nice to know how to redraft a trial balance, especially when there were errors, right? I wish we had time for that one, but unfortunately we don't. Right. Jan 2020. Sorry, this is June 2023. Right. So let's take a look. Oh, right. That's it there. On 31st of December 2022, Brooklyn discovered the following errors in the books of Brookie Computer Supply. Sorry. So we have error A, balance of 12436 for furniture was recorded in the ledger as 12364. So you have 12436, the balance of that was recorded as 12364. So this is the correct figure. This is the wrong figure that was used. Is this figure more or less than the correct figure? Less. So you had to fix that. You had to increase the balance. An item of capital expenditure had been recorded as revenue expenditure. So capital expenditure is any expenditure to acquire or significantly improve the value of non-current assets. So you buy a motor vehicle, you buy equipment, machinery, land, buildings. That printer, I bought a part for it costing about $4,000, which is how much I paid for the printer back when I bought it initially. So that was, without that part, the printer would have had to have been retired about 5 years ago. So that was a significant expenditure on the item, right? Like if you buy a building too, and you build new rooms, you knock down walls, whatever, has significant improvements there too, right? Revenue expenditure is any expenditure that is not capital expenditure. Any expenditure you could think of that goes in the income statement: rent, salaries, wages, insurance, bad debts, advertising, all that stuff, all that's carriage outwards, all that is revenue expenditure. It is expenditure, money we spend to make money, like even purchases, right? So it says here an item of capital expenditure. So money we spend, that we say, okay, we did that in the previous question. We bought a motor vehicle, but we put it in motor expenses. That's as a prime example of that one, right? And an item of capital expenditure had been overstated. So like we overstate the value of the motor vehicle or the land. Now, check this. They don't want journal entries. They don't want the actual correction of profit. Look what they want. Complete the following table by putting ticks in the correct column to indicate the effect of the errors on non-current assets and profit for the year. An example has been provided for you. Right. So look, where it went. Okay, yeah, this is here. So the example is the first one. Hold on, sorry, did I do something? Yeah, right, okay there. Right. No, sorry. Right. So the first one was the balance of 12436 for office furniture, which recorded as 12364. So they want to know, complete the table, right, by putting ticks in the columns to indicate the effect of the error on the item, right? So if instead of recording 12436, we recorded 12364. So again, is this figure that was actually used correct? No. Is it higher or lower than the correct figure? So what effect would it have on the balance of non-current assets? Would the balance be too high or too low? It would be too low, which is understated, right? So they wanted to put a tick in the understated column. And on top of that, would it have any effect on profit? Is it a revenue or an expense? No, it's not. So it would ultimately have no effect on profit. So that's exactly what they give you here. See, a tick under understated for non-current assets and a tick under no effect for profit for the year. So let's discuss it, right? Now, this one here, an item of capital expenditure had been recorded as revenue expenditure. So like I said, we did a few of these. You bought a motor vehicle and you put it in motor expenses, right? Or you put it in, you purchased
furniture or something, and you put it in purchases, right? So if you were supposed to record the value of the motor vehicle you bought in the motor vehicle account and you didn't, so you're missing a value inside of your motor vehicle account. So would the value there, so would the balance in the motor vehicle account be too high or too low? Yeah, not. Yeah. Don't worry, we almost, it's like 252. What was the name of the first error? That first one's error transposition. Yeah, sorry, it would be too low, right? So if you don't put the motor vehicle value in the motor vehicle account, it means that you're not going to have enough. Right, now, if we put the motor vehicle, the cost of the motor vehicle in motor expenses, it means the expense figure going to go up when it shouldn't have. And if it's gone up when it shouldn't have, is that understated or overstated? Over. So yes, sorry, hold on. Right. So the expense is overstated. But so if the expense is too high, what would happen to profit? Profit would be too low. So that's why it's on the understated column under profit for the year ended. So they're asking for the effect on profit. Sorry, my bad. And this one, an item of capital expenditure had been overstated in the books. So this one is actually pretty, like, they kind of give it away. If you overstate the capital expenditure, the value of non-current assets will itself be overstated, right? They told you that. And on top of that, capital expenditure is expenditure on non-current assets, which doesn't appear in the income statement. So will this affect profit? No. Now, I'll tell you something, right? On non-current assets like machinery, vehicles, we charge depreciation, not so? If the value of your non-current asset is too high, when you find depreciation, it will also be too high, which will cause your profit to go down. But I think that's beyond the scope of your syllabus, because they've been asking stuff like this a couple of years, right? So it seems to me that they wanted to think like not too far ahead. So if you overstate your assets, your non-current assets, right, that's too high, but then it'll have no effect on the profit. Okay. All right. So I think we have time for one more. Oh, the Jan 2024. Right. This was the next kind of weird one that they brought last year. All right. So here we're going to do. We're gonna run through it because, like I said, it's 5 to 3. Right? Yeah, transposition, that's correct. Okay. So Eastern Lyle is a trader. One second. And then we're going to lock here. Right. Okay, so Eastern Lyle is a trader. Right. The trial balance prepared on the 31st of December 2023 failed to agree. The difference was entered in a suspense account. Okay, so we've met stuff like that already for a day. The following errors were later discovered. Okay. So the first one, payment of 76 cash for utilities used was entered in the cash book, but not in the utility account. So we entered it in the cash book as a credit, because if you're paying an expense, you credit where the money comes from. And we were supposed to debit utilities, but we didn't. How do we fix that? If we didn't debit the account, how do we fix that? We debit the account, right? But because it's a one-sided error, as in that was the only item that was wrong, we know the thing, right? So your credit suspense. So the first one, debit utilities and credit suspense. Right. Next one, the purchases journal was overcast. What does overcast mean? It's too high, right? Now, how do we fix that? Do we increase it or decrease it? Decrease it, right? Purchases, the purchases journal will feed the purchases account. So if the purchases journal is too high, the purchases account is going to be too high. How do we classify purchases? Expenses, money we spend to buy goods, right? So if the expense is too high, we have to bring it down. Expenses have, so EID, expenses increase with debits. So if you want to bring it down, you're going to have to credit it. And if it's a one-sided error, what is the other account? We need suspense. Very good. So we're going to have to debit, suspense, and credit purchases. Again, because the purchases was overcast, it's too high, we have to decrease it. Purchases is an expense. To decrease an expense, you have to credit it. And because it was a one-sided error, the only account affected was purchases, right? We need the suspense account to facilitate double entry. All right, how are we feeling with the first two so far? Right, cool. Google Meet, I know I'm kind of moving fast. Just give me a quick G if you're good with these first two. I know I didn't ask about the previous one. I'm not gonna bother. Right. So you might lose a half mark or like not gain a half mark for the format because the protocol for entering information in the journal is to put the debit entry for the transaction first, followed by the credit entry, which itself must be indented to show, hey, there's a credit entry. Right? But if you have the correct debit, if you have the correct account and the correct amount, you get marks what you have right. Right? If you don't have the correct format, you might lose a mark after. Right? But it's not the majority of your marks. The majority of the marks come from the correct account and the correct amount. Right? And of course, if you debited the correct one and credited the correct one. Okay, the next two. Right. Well, I could fit all of them. Right. This third one here, this was a bit of a problem. Let me come back to that. It's not like a super hard thing, but I'll tell you about this. All right, item 4. Cash, the 200 cash received from Marvelyn Adam was posted on the debit side of her account. So what's the double entry hack? Credit where the money is coming from, debit where it's going. If we receive cash from Marvelyn, it means it's coming from Marvelyn. So we should have credited Marvelyn and debited cash, right? But what they said we did, we debited her account. Was she supposed to be debited? No. So how do we undo a debit? By crediting. And on top of that, she was supposed to be credited. So guess what? We have to credit her twice. So the credit to Marvelyn will be for double the amount of 400. Or? Right. No, hold on. Sorry, right. Marvelyn, right. And because there was a one-sided error, we have to do debit suspense, right? Just a quick second. I see my wife just messaged me here. She probably wanted to go on for the good boy. Eric, how are you doing? Eric, you can check my channel and check for the possible questions. I explained it in detail. But just time boy. I do have it. I have from my July-August classes where I introduce accounts from scratch for Form 4. Right. Item 5. Drawings of 3,000 had been correctly entered in the cash book, but posted to the drawings account as 1,800. So check it. If you have drawings, you're debiting drawings and you're crediting, well, in this case, cash book. So it had been correctly entered in the cash book, but posted to drawings as 1,800. So you have a debit and credit not equal. Which one is the incorrect one? The drawings, which is the debit. So is 1,800 correct? No. Is it too high or too low? Too low. So in other words, the drawings, the debit was undercast or understated. So we have to do what? Increase or decrease it? Increase. To increase a debit item, you debit more, right? So we're supposed to debit drawings, and because it's a one-sided error, we have to credit suspense, right? Okay. Now I know it's 3 o'clock and I hit the gate, so that might be my signal to kind of cut and go. But let me tell you about this number 3 item. The total for discounts allowed was not included in the trial balance, right? Now, if we forget to put something in the trial balance, that simply means we have to put it in the trial balance. There's no double entry. Right. So, but if we look at the marks, it's 10 marks. It's 10 marks and 5 errors. Each error has 1 debit, 1 credit. So 5 by 2 is 10, right? Now, when I spoke to a friend of mine from your school, teacher, she had somebody else on staff went to correct January in 2024, and they said what they did was they debited discounts allowed and credited trial balance. And I was like, oh. So I asked my teacher, because I don't know everything. And he actually did a degree in accounts. His wife is working in accounts and thing. And he's like, what do you mean? We mean credit trial balance. You can't credit the trial balance. Right? Even his wife like rolled her eyes like she's like, what are you talking about? Right. Now, I see in Geneva. So Geneva, that was actually the one I was thinking about, right? So what Geneva have is that we're gonna debit discount allowed and credit suspense. Now, the thing is, this entry here is for, okay, so you see like how we had overcast purchases. If we undercast discounts allowed or it was omitted, that means it wasn't there, right? So, but to me, they just said we didn't put any trial balance, which means, hey, we had the balance in the account, we forget to put. It doesn't necessarily say, hey, we didn't have this balance in the discount account. If that's what they meant, that's what they should have said. So we just figured, hey, it was an error in that year. And then Jan 2025 roll around. And in Jan 2025, the balance of the petty cash book had been omitted from the trial balance. So they bring back the same kind of entry where you omit something from the trial balance, but want a journal entry to fix it. It have no journal entry to fix that, right? Because they're not saying that that in this case that the petty cash book balance wasn't in petty cash. It wasn't in the trial balance. So basically, you had it in the petty cash, and you forget to put it from here to trial balance. It have no journal entry to fix that, right? But as we know, CSEC stands for Can't Set Exams Correctly. Anyhow, folks, we had a cut and run there. We covered quite a bit today. We didn't cover everything in terms of all the possible questions. What you might want to do, and I do have the Jan 2025 or the May 2024, but I think I sent the PDFs in the chat. If you can't see it, let me know. Anyhow, folks, I had to stop there because I had to go for my son and come back because I have a double form 6 in only normal time, 4 to 6 and then half 6 to half 8. Tomorrow, we meet, same thing, 10 to 12 and 1 to 3 with a 1 hour break for lunch. We're hitting some budgets. Now we're going straight to the past papers and we're doing budgets, cash projections, and I'm hoping to tackle the 2 absorption costing questions as well. All right. As you can see, Saturday and Sunday, I have some stuff planned. Normally, Saturdays only have 1 class and then the babysitter leaves at 1 o'clock. So I had to see if my parents could watch my son for the 1 to 3, right? Sunday, we don't have any babysitter, so I don't even know if Sunday could happen. But I'll talk to my wife and see what's going on. I'll talk to my parents and see what's going on, right? I'm sure something could work out, right? Monday he gonna be in daycare up till that time anyway. So, right, Monday is the last day we have, right? Will I be live? Yes, I will be live. Sorry, and yeah. Now again, anybody who's not doing Spanish, if you want to come for one, let me know. I'll find myself here. It's no problem. But I know plenty. Well, actually, when I asked that last time, everybody hand went up for who not doing Spanish. So yeah, if we finish English, you get some lunch and you come down for one. Cool, we will start. Right. Anyhow, folks, that's about it for the thanks for coming out. If you have any questions, please feel free to let me know. Right. But right now, my WhatsApp still have real plenty unanswered messages, but I'll try. Discount allowed debit, free fire. Yeah, we still debating that one. I don't think that's the case. I just think it was yeah. Yeah, no problem. All right, but yeah. So Google Meet, I'll go on there. I'll see you guys tomorrow. Yeah, man, later. And don't forget, maths starting back on Tuesday after PoA.